Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me is Seth, Wunder, Chief Investment Officer of Acorns. And for this segment, we are going to discuss Crypto 101, of course, one of our favorite topics on Trade Talks. Seth, it's great to see you. Welcome back to Trade Talks.
Yeah, nice being here. Thanks again.
With current consumer demand in crypto, how can young investors get started with crypto investing?
Yeah, I mean, certainly crypto has been all the rage for the last couple of years. Our investors at Acorns, our customers, have an interest in that as well. The best way to start is to focus on the same practices you have in investing, whether it be with stocks or bonds, and recognize that crypto is a very volatile asset class. Micro investing with small amounts and doing it over time is the best way to take advantage of that volatility, to have it a part of a diversified portfolio so that the small investment doesn't overwhelm the risk in your portfolio, and to think about it in terms of the super long term, because with volatile assets there will be sharp moves, and so we think about it similar to the rest of those, and make it a consistent part of your process going forward.
How should young investors think about adding crypto to their overall portfolio?
So we've enabled the idea of having Bitcoin as being a piece of your diversified portfolio. We think that's the right approach, so that way you can dollar cost average into Bitcoin, and that you can think about it as a segment or a small slice of your overall diversified investment account. There are lots of people out there today that are aggressively trading in crypto and so forth. I think that's a difficult approach for most. For one, the volatility can create a lot of losses if you're not careful with how you invest and so forth. And so we're trying to keep it simple for people. And I think for the vast majority of Americans, that's really the right approach here.
What is a crypto ETF?
So crypto ETF, let's think about it more broadly. ETFs in general are diversified investments that allow for people to more easily and more cost effectively own a group of stocks. So whether it be the S&P 500, but it could also be bonds, and now there are also crypto ETFs. The benefit of a crypto ETF is a couple-fold. First of all, there are limited transaction fees, so the lower cost of getting into crypto and getting out of crypto is a big benefit. ETFs are regulated entities, and they trade on the normal stock exchange, as opposed to a crypto stock exchange and having to download separate apps and digital wallets and the complexity around that. And so sticking with something that is regulated, cost-effective, and easy to use for people, for the vast majority of us, is the right way to think about investing in crypto. And
finally, how do you know which cryptocurrencies to invest in?
So that's a great question, right? So, when I started my career in investing, and you go back to the late 90s and the stock market bubble and so forth, certain things became very real. The internet is obviously tremendous. We all have mobile phones, and those were really starting out that time. But many of the companies from back then really aren't around today, or were very small and became quite big today. Amazon was a very tiny company back then and so forth, and and look at it today. But even big companies like Google weren't even public at the time, if you go all the way back into the 2000 range. So do we know which cryptocurrencies today will be the big ones over the next 5, 10, and 15 years? Probably not. I think there will be a lot of these smaller cryptocurrencies that won't make it, and some of them will become quite big. But what's more important is the idea that blockchain and crypto as a broader asset class probably ends up doing quite well over the long term. So for the way we think about it is, keep the investments small, dollar cost average into them appropriately. Sticking with the larger cap ones or the larger branded ones probably have the best or the highest likelihood of succeeding over the long term. But we also have to educate ourselves and stay on top of what's going on from a technology perspective, and realize that there will be winners and there will certainly be some losers along the way. And so keeping it as a small portion of your overall portfolio makes a lot of sense.
All right, Seth, we appreciate the insight. Thanks for joining us on National Financial Literacy Month. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.